morning. Look, the dollar's trajectory, it's a one-way street at the moment. It's down. I want you to set the stage for 2021. You say that the risk-on, risk-off narrative will fade and that we will become a little bit more idiosyncratic. We're going to see a new normal. What is the new normal? Welcome to Daybreak Middle East.
Well, thank you very much. And I think that new normal is going to be a function of who's going to have the less scarring from COVID. I mean, as you've been rightly pointing out, we're thinking about the vaccine. Where is it going to be rolled out first? And that will shape a lot of about the recovery, so to speak. And I think it's going to be trying to understand who's going to be the fastest horse. Everyone is writing off the U.S. and the dollar right now. But our thesis has been a little bit different. We've been quite constructive on a number of Asian currencies, some of the commodity currencies or other emerging market currencies. But the dollar itself versus some of the major currencies like the euro and sterling, I feel like there's just too much tunnel vision right now, and people are just far too negative on the greenback versus those two primary currencies.
And that divergence, you say that we will have a divergence into 2021. Take me through the divergent reasoning why the dollar strengthens against the euro and the pound in the first instance.
Well, I think this divergence has really already been playing out in the way that the dollar has been performing versus many different currencies. I mean, yes, over the last week or so, it's breaking down more broadly. But over the last few months or last couple of quarters, actually, the outperformance, as I said, has come from Asian currencies or some of the commodity currencies, in particular the Australian dollar, maybe even the New Zealand dollar. But the dollar was holding up relatively okay versus euro and sterling, again, over the last few months. And I think this is where this divergent theme should be playing out. You know, if you want to be thinking about growth and policy flexibility and who can recover faster from this, it's already been the currencies that I've been showing my preference for some time. It can probably continue. But it's this ugly contents against the likes of the dollar and euro and sterling where the scarring could actually still remain very, very significant in the Eurozone or for the UK economy, and in turn could undermine those currencies somewhat. We're not turbo negative on the euro or British pound for that matter. We just disagree with some of the groupthink that's very evident in the market right now.
We'll return to the pound in just a moment. Let's focus in on the dollar. We have this new narrative this morning, the Democrats standing behind a bipartisan $908 billion. Is that enough? You talk about the fiscal impulse could lead to a less pronounced cyclical recovery and could restrain the dollar upside. Does $908 billion change that narrative?
I don't think it does. Actually, you know, the Fed policymakers and U.S. policymakers altogether have moved very far, very fast right away. And if you look at how the growth surprises that are coming out of the U.S., it just keeps on coming through to the upside. And that's a very positive narrative. We also heard from Powell overnight talking about he's sounding a little bit more optimistic. He even had one Fed official talking about potential tapering. Now, that's not a 2021 story, obviously, but I think it demonstrates that actually maybe the market is just getting a bit too one-sided in terms of how they're thinking about the outlook for the greenback. You know, the landscape would have to be very different in terms of the global growth outlook. We'd need to see a much stronger synchronized recovery to really lead to a much weaker dollar than what's already played out.